TGIF Warriors, NFP upcoming. Get your levels ready. Hello, Sinatra, Michael, AJ, James, Bran. No fat pips. How about lots of fat pips? Ryan. Okay. So let me start with you, Ryan. Good morning. Good afternoon to you. You doing anything special in front of
Morning,
it?
Dale.
Morning, buddy. Dollar at some resistance right up here. Maybe a little double bottom, maybe get A, B, C. It's almost like it's set up for what you're looking for. You're looking for a weak number, right?
Yeah, well, that's what I've gone for. It can be whatever it wants to be, but yeah, I'm
Yeah,
going for a low number, and that if we get something like that, 99k, that's what I've picked. Yeah, we should get a bit of a spring up in the euro dollar.
okay. Well, I was talking 46, same situation here with
Yeah,
US dollar yen. Is this an important level or higher?
yeah.
Higher?
The break of 145 is a bit significant. That was my worry point. I didn't want it breaking above there. It has.
Okay.
It's carried on going. It's hit your moving average there. We got the 50 fib of the move down from 152 at 146.0708.
Yeah.
So it's all going to be that's the next big area into 146. You can see those prior highs we had there after the breakdown, the first breakdown.
Yeah, and we have VIX is trying, and what was I going to show? Show the 10-year. So up another 4 bips.
Yeah, it's grinding a bit. It doesn't feel like it's fully active yet.
Yeah.
It's had the
Well,
break above 4%, and it's only it's crept a bit higher.
yeah. So I thought I would do the fibs. It's about 120 bit move. So 4.25 is 38%.
Oh, not you
And
as well.
also,
Have
what's
you, have
that?
you put have you put this big bet on as well, Dale? There's some traders put a big trade on for yields to on options for
Oh,
yields to close in on 415, 420 today on the back of the
okay.
NFP. We thought it was Gavin in our chat room, but now you're talking about it as well. It might be you. 10 million.
Well, I'm neutral.
Yeah, that's what you
Everything.
say. You're sitting on 625,000 premium of options there, Dale.
Yeah,
Which we
I
There's
don't know.
my
I don't know if Dale followed that one. That he didn't. I don't think Dale got that joke, but it could have been Dale. Could have been the whale there.
Dale
uh-oh.
the whale.
I
Oh, there
am
we go.
I'll tell you, I am a bit overweight, guys. But
Trading whale.
my
Yeah.
big bet is here, and it's teasing me. I have 180 strikes that expire in 2 weeks. So I mean, it could be melt away on the number, or if we get some continuation um, in the market, Apple looks pretty vulnerable. We're down already 10% in Apple from the high 2 weeks ago, compared to the market, being down 2 or 3%. So this was leading to the downside. And, I did want to mention this, that the trade selection was based on RSI. Because there are other things that look like they were topping, like Amazon, which looks a little bit ugly here. But, we were confirming on a lot of this stuff where Apple wasn't. And this happened before we started getting downgrades. So it's just another reinforcement that, technical indicators can help you select the best. And, even the S&Ps were really not diverging up at the highs. Forgot some of the ones, but Apple was the only thing that had momentum stalling on multiple time frames. So we'll see.
Dale, you point out, these, critical equities, and I don't know if you saw the tweet from, Helene Meisler, right?
Yes.
Yeah, she tweeted me today and she's like, and I retweeted it. So for those of you that are not on Twitter, she basically said, this reminds me a lot of the dot-com bubble. Things that we hear about like Yahoo, about a lot of these big names. Somebody sent it out yesterday, and I tweeted about it yesterday and I retweeted it rather about how some of these big companies, their market caps are bigger than countries, and all of the UK markets, and you hear stats like that, and we heard stats like that during the dot-com bubble. And
Yeah.
there's there's a lot of similarities, right?
Yeah, the Mag 7 are 1/3 of the value of the S&P 500.
Well, and let me just get the stat for you really quick. Oh, here it is. Um, the Mag 7 is now the same size as the combined market cap, the entire market cap of the stock market in Japan, Canada, and the UK.
Wow.
I mean, that's silly. That's silly. I mean, so you're saying that the Mag 7s, three times the amount basically than all of the UK markets, and that's what the graph actually shows, about, maybe four times the size of all markets in London, Ryan, and the UK. All those stocks, the Mag 7's worth more than that. Four
Was that
times.
adjusted for FX?
Huh?
Was that adjusted for FX?
No, I don't think
Dollar
so.
value.
Dollar, just yeah,
Exactly. Dollar's worth nothing.
but still,
I
that's crazy,
yeah.
right?
I
I
heard you had a
mean,
lot of wind in the UK this week, Ryan. Did you try and fly a kite?
Yeah,
Huh?
there's been tons of wind. I lost my hair though; it blew off.
Like 90
Uh,
miles an hour wind.
yeah, we had it down here the other day. Sun's out today though, so I'm going to take a picture of that and put it on the wall. I can look at it for the rest of the year.
Did
sun's out, guns out, Ryan. Sun's out, guns
Sun's
out.
out.
your power,
Sun's out.
did the
Guns out.
grid hold up under that kind of wind?
Yeah,
Did
we've
you
got
lose
windmills,
power?
mate. Yeah,
Huh?
we've got windmills. No, we don't lose power over here. We're not a third world country like you lot. Bit of snow and all your power lines go down. Yeah, no, we've got
Yeah,
windmills and everything now.
yeah. I know. We're like Don Quixote over here. So anyway, Blake, I'd like to see your chart on VIX because I just have you know, just in case things happen, it is a 2-week reversal, and 16 is a big area. Gets through 16, it could try the 20s.
Yeah, I'll pull up the VIX. And I think this is the most important chart right now. Is the
They
10-year.
look similar. I
Yeah,
noticed that yesterday. The VIX and yields look almost the same.
yeah. So if you've seen this VIX chart, which Dale, you obviously have for a long time, you know that this support zone has been drawn down here for like, oh, I don't know, ages, right?
Yeah,
Since
a
COVID.
generation.
No, yeah, but I've had that support zone really drawn out since like COVID. I just keep extending it forward. This is the COVID lockdown,
Yeah,
and I've had that red support zone out there
yeah,
ever since. And we held it through the 2021. We finally started to dip through there last year, but I never wavered. I never moved it, and
yeah.
we got to the bottom of that support zone, and here we are
11
at the
and a
top.
half. I think 11 and a half was a recent low.
Yeah, and that was basically the lows of pre-COVID 2019. So you go back
Yeah,
to 2019, that was the support zone that we've been on. We respected it, and here we are at the top end of the zone right now with
yeah.
now, wait for it.
Poking its. Yeah.
Wait for it. Wait for it.
Oh, it's an extension.
It's a
Oh,
head and shoulder pattern.
oh, okay. Yeah.
Whoop, that
I think that
measures to
measures
something like that.
17,
What's
that
that?
formation. I think that measures 17, that
Yeah, I think
formation.
that's probably about right.
Yeah.
17 might be right. Puts
Yeah.
it above the 200 DMA.
Yeah.
That which will get a lot of attention. I mean, it's not like insignificant. I don't think it's, end of the world stuff, oh my God, I need to, liquidate my IRA. It's barely even a blip when you're talking about, spikes in the VIX, but, a move above the 200 DMA and move towards 17 would probably, the S&P 500 would probably be trading around 4,500, I would
Yeah,
think.
eventually they're going to come in and buy this break because of exactly what you said.
Yeah.
So they're going to try and buy it. We're not just going to. I don't think you have a real big puke job, but what do you have levels in S&Ps
I
for
do,
something
and we're
that?
going to talk about that here in a second. But this is the
Okay,
ForexAnalytix chat room, and FR says Dale the
Dale
whale
the
can
whale.
catch on. Do you see that?
Yeah.
Dale
Oh
the
yeah.
whale. I like it. Dale the whale. And
I just want to let everyone know I never went to Jeffrey Epstein's island. All right,
so
you're not going. If you're looking for me on that list, you're wasting your time.
in the news and news and research room yesterday there was a headline here that pre-payrolls option wager targets 4.15 10-year by Friday close, and that was a Bloomberg.
Okay,
That was Dale the whale trading yesterday, looking for yields for the 10-year to get
playing
up
it.
to look. I mean, that was a good bet, right?
Yeah,
Looking for a move up here in the 10-year today. That would suggest, and again, this is in the ForexAnalytix chat room. I'm going to go ahead and put it back on the general chat and go back over here. The thing about the 10-year rallying like that, we'd have to have some strong US data. So you know, uh that's what would constitute this move. Now, Ryan, you were saying you still expect some weak US data. Um, how would you play? And I know you're already kind of focused on the dollar yen, but how else would you play weak data if you saw weak data today? Because I know how I'm going to play strong data. If the data is strong, I know exactly what I'm going to do. But
Yeah.
if the data is weak, I'm not sure. I think what I'm going to do. Well, actually, I know what I'm going to do is I'm gonna end up buying a dip in the dollar. But what would you do?
Well, I'm not expecting weak US data.
Oh,
Don't take
okay.
my NFP guess as my overriding view of the market. That's a lottery guess.
Oh, okay. All right. All right.
I'm going to look. I'm going to look both sides as I always do. I don't like to pigeonhole myself into one way or another. If we get strong data, I'll be looking at dollar yen up towards 146, up towards that 50 fib, as mentioned. Downside maybe into 144s. But I think looking at something else, if it's weak data, then the euro is going to take off again. So I might be looking at that. I know you're looking at 110 as well. That might be a decent area just to try a bit of a fade play on that.
Yes, sir.
Um,
That would be one trade. That would be a play for me. I would be looking for
yeah,
110, like a short up there, because that would constitute like a bear flag pattern. Look just like, yeah, that's what it would look like. So
yeah. Well, we had the play, 110, 110, sort of 15.20, which is just under your little toolbar there. That blue line comes in around there as well. That was prior decent resistance, and we knocked up there for a long time, broke it, came back down pretty quickly, and held under it straight away. So yeah, up into that 110 area would look pretty good from here. On some really weak numbers. So
yeah,
yes,
so let's talk about that, because if it's weak, and this is the important thing about the jobs report for me. Like I know when to get out of the way, and I know when I want to stand in the way. So for me, if the data is weak, I hope we only create like, 110,000 jobs or something. Because the market's going to look at that and go, hey, wait a second, they're still, the US is still creating jobs. The knee-jerk reaction would be weak. You'd see euro maybe trading up towards 110, but then, eventually the market will probably be, you'll probably see the dollar getting bought. But let's say we created zero jobs, and
yeah,
or
it's a question of scale. It's always a question of scale. Obviously, everyone looks at the headline number first. So, if, if it comes in at close to zero or negative number, yeah, the market's going to react pretty wildly. If it comes in, like you say, 110K, yeah, the market's going to have a little wobble on it, but it's still a positive number, a year-end number. And then you have to focus on the other details. Unemployment could drop, wages could rise, and that will override a poor NFP number. So you have to take it all together. That's why it's not easy to grab a trade right on the immediate seconds the numbers drop. You have to assess the numbers. What's good, what's bad? Is the participation rate up or down? What's that done for the unemployment rate? And when you've done that, then you can get an idea and say, right, NFP might come in 5K, but if wages are 4.5%, unemployment is 3.5%, that's going to knock out that bad NFP number.
Yeah. And how about if average hourly earnings continue to rise? Like it's funny. And I look at this anecdotal evidence around me because I have teenagers that work. Both of them work in restaurants, right? And they're teenagers. And they're like, if I went over to here, I could make $1 more. And then I go over and I'm like, you guys are making $18-19 an hour. We're flipping burgers. I mean, like literally flipping burgers. I'm not exact. I'm talking about In-N-Out Burger. Dale knows In-N-Out Burger. It's like, wow. I mean, kids are getting paid a lot just to flip burgers. I mean, but the average hourly earnings are not going. They're staying very high.
Yeah, they've been sitting
just on these lower end jobs.
Ages. Yeah,
what's that?
They've been sitting around that 4% mark for a long time now.
Yeah, they have. I mean,
wages.
Not backing off. I mean, inflation. Yeah. That's going to be the big question mark this year. But anyway, different conversation. We don't have time to really get into the whole inflation conversation at the moment. But yeah, you're right. There's so many data points that we're going to be looking at today that are going to be, moving the markets. I would suspect. So you're exactly succinct in what you're saying. So okay. We talked a little bit about the euro. We haven't heard from Kman. Kman, what are your thoughts? I mean, strong data, weak data. What's your battle plan here today?
Okay, I'm as I said on the flow show as well. I'm very open with the data, but I do think that on the combination of the labor data and the ISM later, we could kickstart a bit of a dollar move, at least until CPI. So in terms of strong and weak, because we do have the Canadian numbers as well, I will keep a very close eye on dollar Canada. I do think that if the Canadians finally start to see their labor market come under a bit of pressure, and if in turn we got a good dollar US report, I think dollar CAD could take off. That is one that I'm going to be monitoring very closely.
Can I say something real quick with this? Because I too in the week ahead video, I was like, I just want to be long dollar CAD. I have not been able to get long all week. And that means that if I haven't been able to get long all week, for pullbacks, that's what I mean. I'm looking for a pullback to get long. I haven't been able to get long. That means traders aren't able to get out of shorts either. I mean, unless you just, take out offers, if you're waiting for a dip, you're like, okay, I'm short from last week at 133. I'm just waiting for it to dip to 132 so I can get out. You aren't getting that opportunity, and that's scary, right? If you're short or if you want to be long, you got to start chasing the market soon, especially if we break out.
Right now, the shorts I'll give it another day syndrome.
Well, they're going to give it to NFP. Now, if you're short, you're actually praying. You're a religious trader now, right? Dale,
I like that.
You are praying to the gods. Anyway, Kman, I'm sorry, I didn't mean to interrupt. I just wanted to say that it's been an insatiable grind higher in the dollar CAD.
It's been the same in all dollars, right? Since the turn of the year, or in most dollars, barring sterling. And that brings me to a pair that I will be watching in case of a weak number, because sterling still looks to me or feels to me like wanting to trade relatively positive compared to others. That's going to be one that I'm going to be watching. I've got like two quite clear levels, and it's the 126.10 on the downside. It's multiples lows and highs. That's and it's been low again, I think already twice this week. And yep, exactly that box, and the 127.25. And in case of a weak US report, there is a chance that sterling is going to do better than the rest, and a revisit of 128 is on the card. So that's in case of a weak report. In case of a strong report, I think the euro will go and have a visit at 108.5. And then the Aussie, there's very interesting level in the low 66s on the anywhere between 66, call it 10-ish to 65.70. There's a really good zone there on the Aussie. So in case of a very strong report, I would say we are going to have a look at that and then really see what the Aussie is made of. If that holds, then I think I'm going to look at some Aussie long versus something. So those are two.
That would probably take you into next week, right? I mean, theoretically. Yeah, I mean, that's one of those today you kind of have to let today play out, and maybe next week look at some longs down at these levels, right?
Yeah, I'd say so for this week. And yeah, I mean, if we get a really strong report and then the Canadian report, I'm actually only looking at a bit the one side on the Canada, because stronger Canadian dollar. I don't know whether it's going to last, because we have seen crude or the energy market move up, but Canadian dollar not really benefiting a lot from it. So that will be one for if we get a strong US number and a weaker Canadian number. The other side, I'm not really planning too much right now. But if you get a very positive risk report, let's say like very mild minis, but the rest is still doing okay, I think something like the mix could be interesting to be in again. I sold like really, really small Euro mix yesterday afternoon, bought half of it back this morning. Yeah, that's one that I'm looking to trade on the basis of risk.
All right. Awesome. And the dollar max is still, it's still trading pretty heavy after
Just
we
hanging
broke through
around
this
there.
triangle. Yeah, it's like, and even with the market, moving down in risk, we've seen the dollar max just can't get a leg up. Speaking of which, and thank you, Kman, and thank you, Ryan, for your thoughts. Dale, what we should do is we should talk about the S&P. So, the S&P, very divergent relative strength. This rally, this is the, my highlighted chart when I tweeted out, when we tweeted out, but I did the week ahead video. We just had divergent relative strength on the latest rally. So it doesn't surprise me that we've sold off. The thing is that we're not getting much of a bid here. And you pointed out a lot of the key markets like Amazon and Apple and how they're underperforming and whatnot. Now we're at a bit of a little bit of an issue here, because if we start breaking through 46.45, that's going to usher in some selling, because then you're going to start getting all the double top callers, that are looking at these big levels up here going, oh yeah, we're big double top, reversal failure, failure of the NASDAQ 100, at this failed breakout here. So you're going to get a lot of people really, putting their 2 cents in as far as a bearish reversal. But I also want to point out, Dale, that today's data, based on where expectations are, and I say expectations from the market expecting 6 rate cuts this year, where the Fed may have penciled in like 3, the market's looking for 6, and everybody's talking at the beginning of this year that, whoa, maybe the market overpriced it. Well, strong data is going to end up being negative for risk. If we have employment data that still is robust. We create 160, 180,000 jobs. Average hourly earnings, are still strong. Unemployment rate is still low. All that is going to weigh on equities. But my gut instinct is, even if we sell off a little bit, even if we see some selling in equities, we all have to take a step back and say, but the job market is still strong. So how much downside is there in equities when the labor market is still as strong? So I think the buy the dip mentality is still going to be around. It may not be around today, but it'll be around next week. What are your thoughts on these jobs reports, Dale, and how equities will respond?
Yeah, I think it's smart to keep that in the back of your mind. I mean, retail spending broke records this Christmas. Probably had nothing to do with Powell coming in and sounding like he was making a pivot right before Christmas to get everyone to spend. But yeah, I think the job market's not ready to cave yet, and I predicate a lot of this to this has not just been a stock rally. Actually, TLT has outperformed, which is hard to believe with the kind of rally we had. And to me, TLT looks vulnerable. A lot of people getting on the bond bandwagon. I've cried wolf before. I thought it might be over at 94, went to 100, but I think we're going to have a nice pullback in bonds, and I don't think stocks will like it. I think we could get to 45, 4,400, and then maybe new highs from there. So that's what
And that would be realistic to me, I would say, because just looking at it technically, what I was just drawing out a bit ago, this is the previous triangle, right? This blue, like you can see it's in. Let me get rid of these.
What's that, 45.50, the confluence between
45.50, 4,500. I think that's all thereabouts. Nothing technical analysis is not an exact science. If it was, we'd all be gazillionaires. So it's just, the fact is, if we drop down towards that 4,500, 45.50, you're probably going to start to see some buyers seep in, right? And that'd be the previous triangle breakout point. That's why I'm like, okay, if the data is really strong, and you start to see some stocks, come under pressure, it's like, how much pressure are they going to come under? Now, here's the flip side, and we only have a couple minutes, Dale. If the data is weak, if the data is weak, you might see stocks rally initially,
and then
but
fade.
If it's pretty weak, you gotta think about fading it, because if the economic data is really going to start to show some signs of weakness, and let's say December was the month, this is the month that we see it, any type of rally may be short-lived, and you might get a knee-jerk reaction, higher then lower. So I just wanted to throw that out there before we get into the chart. So guys, I got a lot of stuff I'm going to be focusing on today. One of them was my chart of the day yesterday, which happens to be the Kiwi. Just so you all know, I think the Kiwi is a short on strong data. So that's what I'm going to be focused on. I blogged about it yesterday, so I'm not going to harp on it today. So I'm going to put the US 10-year over to the right. Let me go ahead and grab the US 10-year. You're going to see that 15-minute chart over here to the right. Remember, we are in breakout territory. Middle chart, I'm going to put the S&P. So you'll see the S&P 500. I'm going to keep it on a 15-minute chart. Remember, we are trading below 4,700. That's kind of a bearish breakdown. RSI is a little oversold intraday, but doesn't mean we can't see 4,650. And I think to the left, we're going to put on the dollar CAD just because Kman's really focused on it. Just kidding. No, not really. But
yeah, I am.
Kman is focused on it. But more importantly, we do have Canadian and US jobs, so we can get a double whammy there. And I'm going to go over to ForexAnalytix. I'm going to pull up the data flash. Remember, this is included with ForexAnalytix, so we should get instant data when it comes out. You can see here's all the data points. I'm going to move that over to the left, pull over these charts, push it back over. And you can see all that. We got so much data coming out. I'm going to have to try to scroll through it all. So yeah, last minute thoughts. Ryan Kman, only 20 seconds here.
No, we've got 20 seconds on you.
Yeah. All right, guys.
People.
Good luck. All bets are off, and I need to get my...
Never say good luck.
No.
That brings bad
Break
luck.
a leg. No, don't. All right. Heads up, guys. Here we
You're
go.
superstitious.
I know. I've been wearing the same underwear for like 3 weeks now. It's great.
Oh, that's no big
I've been
deal.
trading well though.
All right.
Bit better. 216.
216.
But
Strong
lower
data.
participation, lower unemployment rate. Canadian, very average.
I just closed my euro yesterday for 65 pips. So I'm just letting everybody know that I was I was short euros and just closed that out. So I need
strong data. Strong data.
Okay.
Yep,
Higher
strong
wages,
data all the way around.
So there you go. Wages went up.
92 in the TLT and the next by the end of the month.
Wow. And look at the 10-year. I'm sorry, I'm just updating trades room.
S&P's down 25 here. They
I
take gold down with the dollar rally.
Yeah,
Silver was
let's
higher earlier.
Here's the dollar just ripping. Look, the dollar MEX has spiked above 17. Dollar Canadian is squeezing the market like a big lemon right up to
good call on that, Blake.
Yeah, I mean, this is a huge pivot for the dollar CAD. You know, that's why it's a big dotted line there. One thing about the euro, I need to point this out. We're at the 38% retracement right now, like literally right at this moment in time. That's why I was covering my short for those people that were in the know. If you knew, you know. If you know, you knew. Yeah, and it's also a 618 retracement of this move. You can't see it until I draw it out for you.
107, here we come.
Yeah, I figured this is going to be some pretty good support, but after this data, I wouldn't want to stand in the way. I just was covering some shorts. I think we can go lower now. And the dollar yen, look, 146, we're there. This is the 50% retracement. What we were looking at this morning is that 146.10 level. You can see it right here for the dollar yen.
Gold is trying to break lower too. Gold is trying.
Okay. Yeah.
We do have a guest today, Blake.
Oh, that's right. We have Dana Lyons. Okay, so look, you know, you guys want some more coverage, especially with the ISM. Make sure you're in with the ForexAnalytix community. We're going to see you there on the morning edge here shortly. Don't forget that gold completes a head and shoulder pattern at 2010. So it's been the intraday pattern we've been looking at for this whole week. So we should get there to 2010, 2015. And should we get there, it's probably a great place to be looking for, you know, to cover. And for those of you that are looking for longs, you know, that's not a bad place to be on the long side, I would suspect. All right. I'm going to let you guys go. I want to say thank you, team, for being here. TGIF. It's been a short week, but a great week of trading. Hopefully you guys have been knocking it out of the park. Ryan, Kman, your calls have been phenomenal this week, so thank you so much. And Dale, you know, thank you for guiding us, and have a great interview with Mr. Lyons.
Okay, I'm waiting for him to join us here as
is he
participant.
Here?
Yeah, he's here.
Oh, do you want me to upgrade? Or
I thought that happened already, but
let me see if
Dana.
There
he is. Is that him? Dana?
I don't see him.
There he is. Okay.
He's here. Okay, great.
And his thanks, Blake.
Yeah, I'll wait for his mic to connect. It should. There he goes. He should be here now.
Okay. And I do want to thank Ryan and Kman and you, Blake. You know, we got right back on the bicycle and saw some turns this week together. Nice work, team. Thank you.
Thanks, Coach, and to you as well, mate.
Thanks, Coach. Thanks, Ryan.
Have a great weekend, Warriors. And Dana, Happy New Year to you, bro. How things been going for you?
Happy New Year to you. Excellent. Blessed. How you doing?
Good, you know, breathing in and out. And this lady once told me, any day that you're looking down at the grass is a good day.
Yeah.
Huh? So
can't argue with that. Can't argue with that.
So, you know, I'm interested in what you think about the first week. that we've had here after the New Year's, Dana? And do you ascribe to, as you know, the first week in January goes, so goes the market, where you like block it into quarters and the kind of methodology I'm talking about, that people take the first day and
Right.
extrapolate it out. Do you believe in that stuff?
There's evidence to all that, but you can find evidence to almost any day of the year and correlations to almost any day of the year, any stretch of
Okay.
days of the year. So I don't. Do we?
You have your own
We
methodology.
have our own methods. Yeah, we're
Yeah.
not going to set our allocations for the rest of the year based on what the market did this week, or we'd
Okay.
have no clients for sure. So,
Yeah.
but January is an interesting month. It's a unique month, separate than distinct from other months, in that it more often is a counter trend month. So,
Okay.
and particularly with the conditions that we had coming into the new year after the rally in risk assets. Momentum was through the roof. Sentiment in the short term had got pretty frothy. So you combine those conditions right for a reversal with the fact that January, when the new year turns, we often see that type of a counter trend move. Not surprised at all to see this kind of a move. As you alluded to, we do have our own methodology based on quantitative models, and our data is good. Still looks good. Still looks bullish in the intermediate term, which is for us, 2 to 6 months or so. So from that aspect, to be honest, in an intermediate term, I don't see anything that really worries me right now, other than the short-term counter trend move. So from that aspect, we're looking to buy dips in risk assets, especially equities.
How
So
about
that's
the
where.
Mag 7, Dana? They've been underperforming. Apple has already come off 10%. Is that a buy to you?
Yeah, tech is one of those areas that has been a relative strength leader, obviously.
Right.
I think it continues to be a relative strength leader in the intermediate term. In the short term, obviously, it's been it's probably the most exposed right now, just got, way ahead of itself. But if you look at tech overall, I think in the intermediate term, like I said, I think it's a buy into dips. NASDAQ 100 obviously tested all-time highs.
Right.
Still a strong looking chart, as long as the underlying data is good. And like I said, our stuff still looks good. So after some sort of consolidation pullback, looking for new highs in the NASDAQ. You look at some of the popular tech funds, XLK went to new highs. Any pullback towards that breakout area in the 180 to mid 170s range is a buy for us. Same thing with semiconductors, SMH, for example. Same thing, new highs, consolidating. It ran a lot. So for this pullback to unfold is not unusual, not unhealthy. So we're buying dips pretty much across the board in tech land. Is the
Do you have like a level in the SPY that you're going to use as a key for entries on these other ETFs? Where you think the S&Ps could go to before you start deploying?
No, we look at everything on its own merits. To be honest, we don't base everything off the S&P, because you had the Magnificent Seven, as you called it, for example.
Pull up Apple
back in
Dana.
July, and then you had other stuff that was going straight down, which was a warning sign in July, and kind of distinct from conditions now. The last half of the rally following October, the internals have been great. The participation has been very broad. Still, the broader market's way off of the all-time highs. I don't know if we get there, but the participation was great. The internals were solid. So it's a lot different than conditions we saw in July. So that speaks to more of a counter trend short-term pullback than it does sort of a major top. So in the S&P, you know, we're probably going to test that first, maybe initial support level 4630 or so, maybe today. You know, that breakout area down in the low 4500 area would be a spot that as long as the data holds up, we'd be aggressively buying there. So we came into the year significantly long, but a lot of dry powder still in anticipation of some sort of a pullback. So we're starting to deploy that for sure.
Okay, a heck of a run in TLT from 82 to 100. To me, looks ripe for a pullback to 92 or so.
Yeah, and you know, I heard you discussing before it came on, and I think you're spot on in the fact that people underestimate the amount of rally in bonds, you know, over the last couple months during concurrent with the stock rally. I mean, bonds have been just as impressive to me. And the key is, and we got to zoom out a little bit to look at what's going on in the bond market. And there's the 10-year yield. And this is one of the bigger developments, I think, in financial markets right now. Going back to the highs in the early 80s, we think that long 60-year cycle in interest rates bottomed in 2020. So we think we go up for, you know, decades to come, probably make a run eventually at double digits again. So, but in the obviously nothing goes in a straight line. So the first big level is around that 4% level where we tapped out a year ago, consolidated for a while, broke out, opened the way to 6.5% next, as long as this breakout level holds. Now we're obviously, after the pullback in yields, there's a huge test of that breakout level around that just above 4%. So if this level does hold, that still opens up the upside to 6.5% next. If it doesn't, and we have a suspicion that it'll be a false breakout and will open up further downside. We'll see. Obviously, being tested here today with the move in yields, but we have a suspicion it's going to be a false breakout, open more room to the downside, maybe towards 3.25 next. And the reason I said that, you mentioned that TLT been a great bounce, obviously, since October, and we're not a huge volume guy. I don't spend a lot of time looking at volume, but if you look at volume in TLT, especially around the bottom, and then even during the course of the rally, I mean, it's been a pretty impressive volume. Which means
Fed was getting pretty long down there.
Exactly. Conspiracy. Open your own conspiracy theories for sure, but the volume is pretty
left an island
to
bottom.
Me. What's that?
Left an island bottom, it looks like, and now we could leave an island top.
Could in the short term, and it's interesting how it's trading hand in hand with equities right now. So, in our view, maybe a short term, you know, counter trend move. Started, you know, at the first of the year, just like stocks, and would not be surprised to see this thing eventually continue higher. Like I said, put a false breakout in yields for now. Again, long term, very bearish on bonds. We think,
but we could have do you think we could have a wave of equality after this pullback, which was 18 points? So say we pull back to 92, that's going to give you 110.
Wouldn't surprise me at all.
Some guys are talking 120.
Yeah, maybe. I mean, look, maybe 120. If you look at if you're looking at equal moves from the lows, and you combine that with the volume that we've seen. Wouldn't surprise me at all. Going back
And
to
it would
the
just be a retrace from the highs a few years ago at 170 or 180. So, you know, this,
exactly.
right?
And if we are, down the road going to 10%, what
Yeah.
is, a pullback from 5% to 3.25,
Yeah.
270? It's not a big deal. Nothing goes in a straight line. We've had a heck of a move since 2020, right? Up to 5% from, zero essentially. So, wouldn't surprise us. Obviously everything is data dependent. We'll
Yeah.
continue to monitor. We have, as always, we reserve the right to change our opinion, Dale. But the data again right now looks good to us in the intermediate term. So
Okay.
we'll probably be buying the dips here, just like we are in equities.
How about miners, Jamie? They've been trying and disappointing, and there's a lot of it really depends on the miner, different chart patterns depending upon what you look at. But Newmont, GDX, would you buy
Yeah.
pullbacks there?
Well,
there's
yes.
the gold.
Here's
There's
gold.
the gold.
We
Yeah.
trade ETF, so GLD to us, and we've talked about for a long time. Looks like some modified cup and handle, right?
Yeah.
Going back to the highs in 2011.
Yeah.
Obviously, got exhausted at the COVID high. We've gone sideways for the last almost 4 years now. I still think it's ripe for a breakout eventually, so we are long gold. Looking for a breakout there. The interesting thing is, obviously, the miners, the equities are going to be persuaded by gold, but also by the equity market as well. So, should we break out in gold, obviously that would be a big boon to the miners, GDX, which I don't have that long-term fib on here, but in 2020 retraced just that 61 retracement from those 2011 highs. So obviously that's the pull from the equity market. But obviously, if we break out in gold, that should lift the miners pretty well. But like you said, the people have been looking for that, I think, for a while, and kind of stuck in the mud here. Middle of the road, kind of hard to get too aggressive either way. We are long by a smaller amount in miners. But again, gold will be the tell for us if we do break out. Obviously, that would be a boon for the miners as well.
How about the energy sector, Jamie? They've been under pressure. XLE 84, really hasn't made any progress during the war, but there could be escalation there with Iran. I'm not saying it's going to happen tomorrow,
right?
But the odds are increasing of some type of problem in the Persian Gulf with the Strait of Hormuz, and these are pretty cheap.
Yeah, and you look at crude oil. There's a GSCI crude oil index. Nothing to get too excited about. Obviously, this had a great run as well from 2020 to 2022. Pulling back now, kind of in the middle of the road as well, like a lot of commodities are. If I'm looking at the oil equities, I do like them. They showed obviously great relative strength in 2022 after getting beaten down for how many years. So I think after a little bit of a respite, there is plenty of room to go to the upside. Obviously, here's oil services. Had a nice run. This doesn't necessarily scare me right now. In fact, if you're looking for something to buy in equity land that's not extended, obviously the energy sector would be one option there. I could see oil services, OIH, obviously getting from down around 300. I would not be shocked to see it get back above 400. So got still seeing higher highs, higher lows. Nothing to get too concerned about. Naturally, the price of crude is going to have a big say in what goes on here. And right now, obviously, crude is on the chart is challenged a little bit, so that's a bit of a headwind. But we are long the energy sector. I see higher highs continuing here.
Anything overseas? If this dollar rally is just another bear market bounce, where you might get the edge of a weaker dollar helping you somewhere else?
Yeah, you know what? We see plenty of stuff overseas that looks good to us.
Japan still.
The weaker yen obviously has helped a number
Yeah.
of our positions. A hedged equity, Japan, which has
Yeah.
gone through the roof.
Yeah.
Obviously got a bit extended, but this has been awesome. Even hedged Europe has been good. I'm gonna pull that up. So if we see a reversal of that, obviously that would harm these. But you see, hedged Europe had a nice
Yeah.
breakout.
Yeah.
Wouldn't surprise us come back, test that breakout level. Would be buying that. Look for further highs there. But even on a unhedged basis, Japan looks very good to us. Even in the longer term, long term U.S. equities, I'm not too sanguine on after this intermediate term rally. Obviously, the long term what we call background indicators, valuation, investment
do you
levels
think,
are through the roof. Not too excited. Japan,
Okay.
I think, has a long way to go to the upside, and whether it's hedged against the yen or not, I think there's upside there. So I think a balanced portfolio in Japan, hedged and unhedged against the yen, looks good. This looks set up for another leg higher eventually in the Nikkei. So
Okay.
do like Japan
Interesting.
and
So
India.
that augurs for a continued weak yen.
Yep, it
Okay,
does. I
now
think
you
in
brought
this.
this up, so you're saying you're not as sanguine about the U.S. as some other. So do you expect? And I know it's crystal ball stuff, but okay, we're set up. We're in the middle of this pullback.
Yeah.
It's going to be bought back at support levels, and we're going to have another leg higher. You think that we could be terminating something after new all-time highs finally happen in the S&Ps? And I don't think it's your style, but I've heard numbers like 51, 52, and then there are super bulls that say 6, 7,000.
Yeah. I do think there will be a reckoning, a termination at some point. Those long-term cycles are kind of hard to call. I alluded to some of the what we call background indicators, which the long-term numbers like P ratios, which are still sky high despite a little bit of a pullback over the last couple of years. Things like household investments in stocks, which are still just off record highs. All these things that hit record highs in 2000. I think by 2009, the financial crisis had worked off about half of what they should have before the Fed, quote unquote, came to the rescue. And this allowed the rest of that natural correction to continue. And in fact, we reversed and built up those excesses to a greater extent. So I think all of that has to get unwound eventually. So pick a number on the downside wouldn't surprise me. The S&P down to 2000, below 2000, who knows? That could very well happen because we need to correct all those excesses. But we're worried about the intermediate term, and right now, again, I think things look good.
Pretty much all clear for 3 to 6 months here.
I don't see anything that worries me for the next 3 to 6 months. Correct.
Okay.
And that's where we
because it's going to
bets.
matter. I think the stock market matters more this year than any other with the setup that we have for this presidential election. And if we rally and we're acting great into the first half of the year, but we're falling apart in the summer and fall, doesn't speak well for the incumbent party.
Right. Well, historically, that would be the case. Correct.
Okay.
And
right.
that is that, if I'm going to forecast, and I don't like to do it because,
but I get you to do it.
yeah, you do.
I just manipulate you every time you're on there,
Exactly.
Dana.
Exactly.
Right.
And those, and believe me, I'm happy if my forecasts are wrong because fortunately we built some quantitative models that are much
Yeah.
smarter than I am or we
Isn't
are.
that nice?
And that bails us out more
Yeah.
constantly all the time. So one more thing, the value sector, obviously it's
Like
been
the
growth.
Russell? Like the Russell? Yeah.
Here, this is the mid cap. So people don't look at these pure style indices too often, so they break it up into the pure growth and value, and the pure value, strips out any type of growth, which has been obviously the leader. I think of value, even in some sort of a secular decline, value could hold up okay after getting pretty much beaten down for the last couple of decades. And couple possibilities. This mid cap pure value. Okay, RFV would be the ticker symbol. Then
okay.
Turn around after COVID, spiked to a new high. Been a nice consolidation. Finally broke out, pull back towards that breakout point would be something we like to buy, and even the small cap. So people,
I'm hearing even micro cap stocks are beginning to have a heartbeat.
Yeah, they've participated. Like I said, the broader market has participated very well over the last half of the post-October rally. So that's been encouraging. Even some like this is a small cap pure value, which you strip out all the style indices. This one is the best indicator that I've found in terms of risk on, risk off. And you see the small cap pure value testing all-time highs after consolidating for a while. This one's setting up to break out as well, I think. So once this pulls back towards that 100 level, maybe down at 97, I see a breakout and a nice push higher in risk assets, including this one. And again, if we do reach a secular top after that, the breakout, something like value, I think can hold up better for a while. Like we saw in 2000, most stocks topped out in 98, even though the dot-commers ran up into 2000. And from 2000 to 2002, while those dot-commers were crashing, a lot of the market did okay until that meat of the decline in 2002. So you mentioned looking at the S&P 500 as a barometer for our investment. You got to cast a wider net because while the S&P has been kind of the only game in town for a long time, it's going to be the reverse at some point. And if you continue to depend on just that, you're going to miss a lot of opportunities elsewhere.
Okay, so people want to go fishing with you, Dana, because you're going to, guide them towards casting a larger net.
Yeah.
Best place for them to follow you, and you're an RIA, so you manage money.
Yep, we're an RIA. Our obviously our main business is managing money. J Lines Fund Management is the name of our RIA. We did start a kind of a trader's site a couple of years ago called the Lion's Share, where for do-it-yourselfers and traders who like to dabble in it themselves, you can follow along on the Lion's Share. Basically, with what we're looking at, what we're trading, you get updates on actual moves we're making, buys, sells, and shorts on a daily basis. So you can kind of track along with what we're doing. And if you don't want to become a management client, this is a good way to kind of follow along with what we're doing. Do have a sale going on that we left open for your listeners if anyone's interested. But you can find us here at lionsharepro.com.
Well, Dana, I want to thank you. How many years have we been talking now? It's got to be like 4, something like that, 5. But
yeah, I think it's a lot longer than that, Dale.
Wow. Wow.
Time flies, right?
It does, but I want to thank you for sharing your good stuff when you come in here, and you know, also being open to all sides of the market, giving us ideas that our eyeballs weren't aware of before you got here. And so, I want to thank you and hope that you and all your clients, your family, your friends have a great 2024. I was told by someone who does GAN stuff last year not to worry about 2023, but GAN has 2024 down as a year where some negative events can occur and affect uh, the economy and markets. So keep that eyeball out starting, I don't know, maybe in the spring or summer. I'll be looking for something like that. But thanks very much, Dana. I appreciate what you bring to the table and edifying our community.
Well, I appreciate, and Dale, I appreciate you, having me on for the last however many years it's been, and always appreciate you coming on. It's a very smart show. You got smart commentators, smart listeners, and all led by the coach. So I appreciate the community you started, and always fun being on. So I appreciate it, and Happy New Year to you.
All right, everyone, my trading warrior brother, Dana Lyons, and you could follow him on X now at J Lyons Fund Management. Go to his website and check out Dana's calls for 2024. So good hunting, buddy. You have a
Thanks,
great
brother. You
weekend.
too.
All right, I'll be in touch and we'll talk in the spring.
Sounds good.
All right, Dana Lyons, everyone. Now you could join the team in 14 minutes on the Morning Edge. Hope you guys had a good week. We laid it on the court, and we'll do it again. So don't just count your pips, count your blessings. Adios, everyone. Enjoy your weekend. Thanks, Sinatra. Louise, see you guys. Adios, Dana. Have a great weekend, everyone.